All right, get ready to dive deep. Today, we're taking a close look at IDFC First Bank's second quarter results for fiscal year 2025.
Sounds interesting.
And we've got a ton of information to go through. We have the official press release, of course,
Of course.
plus a very detailed investor presentation.
Wow.
Even some regulatory filings about their capital and how they're using funds from their recent equity raise.
We've really done your homework.
Oh, we try. And to add a little historical context, we'll even be looking back at a previous investor presentation, kind of to see where they came from.
I like it. Context is everything.
Exactly.
You know what I find really fascinating about IDFC First Bank?
What's that?
Their unique origin story. We're not just looking at numbers here. We're actually tracing the evolution of a bank that was created by merging two very different institutions.
That's right.
Imagine merging a bank that focused on these huge infrastructure projects with one that specialized in everyday retail loans.
That's quite a blend.
It is, like a financial fusion experiment.
Okay, but in all seriousness, we are going to try to uncover how this merger has shaped their current strategy
Absolutely.
and what their performance tells us about their future.
Precisely. Let's rewind back to 2018. This is when IDFC Bank, which was known for its focus on infrastructure,
Right.
merged with Capital First. And Capital First was a major player in retail and MSME lending. So this created a bank with the potential to reach a much wider range of customers.
It did. And they didn't waste any time in reshaping their loan portfolio, right?
And not at all.
They really moved away from that infrastructure-heavy model
They did.
and embraced a more diversified mix of retail, rural, MSME, and corporate banking. But why such a dramatic shift? What do you think?
Well, think of it this way. Concentrating heavily on infrastructure loans can be risky. These large projects, they're very vulnerable to economic slowdowns, policy changes, things like that.
Makes sense.
So by diversifying, IDFC First Bank is essentially spreading its risk and tapping into more stable sectors. Like, think about home loans, small business lending.
So it's kind of like not putting all your eggs in one basket.
Exactly. And the numbers really paint a very clear picture of this transformation. Their infrastructure loan exposure has plummeted from 22% at the time of the merger to just 1.2% today.
Wow.
Pretty dramatic. Conversely, their mortgage portfolio has jumped from 13% to a substantial 29%.
Okay, so what's the takeaway here for our listeners? Why should they care about this strategic shift?
I think it demonstrates the importance of adaptability and balance, even in a really large institution like a bank. Whether you're managing your own personal finances or leading a company, diversifying your investments and being prepared to adjust your strategy can make all the difference in navigating uncertain times.
Very true. Okay, diversification check. Now let's talk about deposits. IDFC First Bank announced a pretty big 32.4% year-on-year growth in customer deposits.
That's a lot.
It is. That brings their total deposits to a very impressive Rs. 2,018,026 score.
Wow, that's a big number.
It is.
And it's even more remarkable when you consider their very deliberate focus on attracting retail deposits. These deposits, they're coming from everyday customers like you and me.
Right.
And they now make up 80% of their total deposits.
So why is that focus on retail deposits so important?
Well, I think it comes down to stability and cost. Retail deposits are generally considered a lot stickier than large, volatile wholesale deposits. By building a strong base of retail depositors, IDFC First Bank is creating a more reliable and consistent source of funding.
Gotcha. And that lower cost funding is where things get really interesting, right?
Absolutely. By relying more on these retail deposits, they've managed to significantly lower their cost of funds, down by 132 basis points since the merger.
Okay, now for those of us who aren't, financial wizards,
Sure.
can you break down what that means in practical terms? Why should we be impressed by a lower cost of funds?
I'll try. Think of it this way. When a bank has to pay less to borrow money, it can offer more competitive interest rates to its borrowers
I see.
and potentially even higher returns to its depositors.
Right.
So it's kind of a win-win situation, right? And it really strengthens their position in the market. This kind of strategic financial management, by the way, is a lesson anyone can apply,
That's true.
whether you're, say, negotiating a loan or looking for the best savings account.
Okay, smart moves all around. Now let's shift gears a little bit and explore how IDFC First Bank is navigating the, somewhat choppy waters of India's microfinance industry. This is a sector that we know has been facing some serious headwinds lately.
It has.
Right.
We've seen increased leverage within the industry, meaning more borrowing to fuel growth,
Uh-huh.
and then coupled with the cyclical nature of elections and even extreme weather events like we've seen with the heat waves,
Yeah.
the operating environment for microfinance lenders has become quite challenging.
And on top of all that, we have these evolving regulations around group lending discipline. So how has IDFC First Bank responded to this, well, I guess you could call it a perfect storm brewing in the microfinance sector?
I think what's interesting is that they actually saw these challenges on the horizon back in December 2023, and they started taking proactive steps.
That's good.
They began by slowing down disbursements in their microfinance segment. A tough decision to make.
Yeah, especially when you're aiming for growth.
Right, but necessary to control risk in such a volatile market.
It takes real discipline to kind of pump the brakes when everyone else seems to be speeding up.
It does. And they didn't stop there. They also started securing insurance coverage for a larger portion of their microfinance portfolio
Oh, okay.
through a government program. It's called the Credit Guarantee Fund Scheme for Microfinance, or CGFMU for short.
That's a mouthful.
It is. But essentially, it acts as a safety net,
Mm-hmm.
helps to mitigate potential losses if those borrowers default on their loans.
Okay, so they're being cautious, but also strategic in managing their risk.
Exactly.
And get this, despite all the industry-wide stress, IDFC First Bank is actually outperforming the average delinquency rates in many states.
I know, it's really interesting.
They're bucking the trend.
It's a testament to their careful underwriting process, their deep understanding of the microfinance market, and their willingness to make those tough choices early on.
That's right.
I think it's a real-world example of how being proactive and having a well-defined risk management strategy can really pay off, even in the face of adversity.
I agree. Okay, we've covered a lot of ground already. Let's take a quick pause, and when we come back, we'll dive into some more intriguing details, things that really highlight IDFC First Bank's unique approach. We'll uncover a rather curious incident, one that involves a toll road.
Ooh, a toll road.
Yes, and we'll explore their digital strategy, which seems to be a key ingredient in their success. Stay tuned.
Can't wait.
Welcome back, Deep Divers. We are right in the thick of IDFC First Bank's story,
We are.
exploring their fascinating journey, from a merger of opposites
Yeah.
to their really impressive moves and deposits and their loan strategy. Now, let's unpack a few more details that really highlight their unique approach.
One thing that keeps coming up,
What's that?
it's their proactive approach to risk, especially in that microfinance sector. It's not just about numbers, is it?
Yeah.
It's about understanding the lives behind those loans. Remember, IDFC First Bank primarily focuses on women borrowers, right,
Yeah.
in rural areas, providing these small loans for livelihood generation.
Right. It's about empowering these women to build businesses to improve their lives. But as we discussed, the microfinance industry in India has been kind of hit hard by a combination of factors.
It does.
Everything from those volatile election cycles
Yeah,
to extreme weather events like those heat waves we've seen.
absolutely. And IDFC First Bank could have just, crossed their fingers and hoped for the best.
Right.
But they didn't. Instead, they acted decisively. Remember we talked about how they started slowing down those disbursements
Yes.
back in December of 23
Uh-huh.
when they first saw the warning signs? I mean, that's a tough call to make when you're really aiming for growth.
It is. It's like having the discipline to say, okay, hold on. Let's make sure the foundation is strong before we build any higher.
Exactly. And they didn't stop there. They also secured insurance coverage for a much larger portion of that microfinance portfolio
Right.
through that government program.
The CGFMU.
Yeah, CGFMU.
Mm.
In simple terms, this program basically helps protect them if those borrowers default due to, unforeseen circumstances.
So it's kind of a safety net.
Yes.
It allows them to continue lending to these women entrepreneurs
Right.
with more confidence. And the most impressive part is, despite all those industry-wide challenges,
Yeah.
IDFC First Bank is actually showing better delinquency rates than the average in many states.
They are. It's
They're
great.
defying the odds.
It all comes down to, I think, their very careful assessment of risk, their understanding of that microfinance landscape, and their willingness to make those tough but proactive decisions.
Right. It's a masterclass in risk management, proving that sometimes slowing down can actually help you get ahead in the long run.
Very true.
Okay.
Speaking of risk, though,
Yeah.
let's revisit that That intriguing one-off provision of 253 crore rupees. Remember that?
Yes, that was due to the Maharashtra government's unexpected decision to waive those toll fees
Right.
at the Mumbai entry points.
It was. Talk about a curveball. It's a prime example of how external events can just suddenly impact a bank's bottom line.
I know. Even when they're doing everything right internally.
Exactly. This decision, it directly impacted one of their infrastructure borrowers,
Yeah?
which is what led to that significant provision.
Makes sense.
It really highlights the reality that even with the most, I think, meticulous risk management, sometimes those external factors can just throw a wrench in the works.
It does. It underscores the importance of flexibility, adaptability, being able to adjust to the unexpected.
For sure. Now let's turn our attention to something that's becoming increasingly crucial, I think, for banks these days.
What's that?
The customer experience. And IDFC First Bank seems to be really hitting the mark, especially with their mobile banking app.
Yeah, their app has been getting rave reviews.
It has. And it's not just about being user-friendly, right?
Oh,
It's
yeah.
about offering this whole suite of features
Yes.
that goes beyond just basic banking.
They've really thought of everything.
They have.
And the numbers don't lie. Over 16 million users. A 4.9 rating on Google Play. 4.8 on the App Store. Even recognized as one of the top 15 banking apps globally.
I know. By Forrester Research.
Amazing.
They've invested so much in creating this seamless, engaging digital experience. And it's clearly paying off. Remember we saw how those customer calls to the contact center have actually dropped significantly?
Yes.
Even as their customer base has expanded?
It's like they've empowered their customers to really take control of their banking needs, which leads to, well, higher satisfaction.
Right. And loyalty. It's a win-win for both the bank and the customer. And speaking of wins, let's talk about their foray into wealth management. They've managed to grow their assets under management,
Right.
or AUM,
Right.
at a remarkable 60% CAGR.
That's a lot.
It is, exceeding 20,000 crore rupees.
That's incredible growth, especially considering they basically started this venture from scratch, like 5 years ago. It shows they're not afraid to, branch out and explore new avenues for growth.
It really does. It's a textbook example of strategic diversification, isn't it?
I think so.
They're evolving from a bank that's really just focused on everyday transactions
Yeah.
into more of a comprehensive financial partner.
Right, for their customers.
It's about building those deeper relationships and offering, value beyond just basic banking services.
And let's not forget their success in the FASTag segment. They've become the largest issuer among banks involved in that national electronic toll collection program.
And they have over 20 million FASTags issued. It's contributing to a much smoother, more efficient toll collection process, across the country.
It might seem like a small thing, but it actually impacts millions of people daily.
It does. And it all ties into their vision
Yeah.
of becoming a true universal bank, offering this comprehensive suite of products and services
Right.
to individuals and businesses alike.
Right.
They're aiming to be that one-stop shop for, well, all things finance.
Yes, they are. But let's get back to the numbers for a moment.
Sure.
And dissect their financial performance a bit more. Starting with their loan book, we know they've been shifting away from that infrastructure-heavy model,
Right.
focusing more on the retail, the rural, and that MSME lending. What's the story the numbers are telling us?
Well, their total loan book has grown by a very healthy 21.5%
Oh.
year on year, reaching 2,022,613 crore rupees.
That's a lot.
That's a solid indication of growth. And if we look a little bit closer, we really see their strategy in action. The retail loan book, it surged by 25%,
Wow.
while corporate loans, excluding infrastructure, have grown at a steady 20%.
And just to reiterate, that infrastructure loan exposure has shrunk to a tiny 1.2%.
It has.
Really shows their commitment to diversification
It does.
and building that more balanced, more resilient loan portfolio.
Look, a carefully calculated strategy that seems to be really paying off.
It does. Now, to understand their profitability, let's dive into their income statement a little bit.
Okay.
We know their net interest income, or NII, has grown by a very strong 21% year on year, reaching 4,788 crore rupees. That's a key indicator, right,
It is.
of a bank's core earnings
Yes.
from its lending activities.
Exactly. And their fee and other income has also seen a very healthy jump, 18% year on year, driven by the growth of those fee-based products, things like the wealth management, their credit cards, and those fast-tag services.
So it's another sign that their strategy of diversifying those revenue streams is working.
It is.
But there was a significant increase in provisions this quarter, which ultimately impacted their bottom line. Can you explain that a little bit?
Sure. Their provisions for the quarter were 1,732 crore rupees. And this is mainly due to, I think, two factors. The first is that they proactively created this provisioning buffer
Okay.
of 315 crore rupees for their microfinance portfolio.
Right. It's that rainy day fund we talked about earlier.
It is a cushion to help absorb those potential losses. Given those uncertainties in the microfinance industry, it shows they're not just chasing growth, they're thinking long-term and managing risk very prudently.
And the second factor was that additional provision of 253 crore rupees for that legacy infrastructure toll road account we discussed, the one affected by that toll fee waiver in Maharashtra.
Right. And given the uncertainty surrounding that loan, it was a very prudent move
Yes.
to set aside those funds. But it's important to remember that these provisions are essentially precautionary measures, not actual losses.
Right. They reflect the bank's conservative approach
Yes.
to risk management, which in the long run actually strengthens their financial stability.
It does. And even with those higher provisions, their core operating profit, excluding trading gains, still grew by a very robust 28% year on year.
Okay, so that's reassuring. It indicates that their core business operations are healthy and have that capacity to absorb those one-off hits. Now let's move on to another vital aspect of a bank's health:
Yes.
capital adequacy.
Right. Capital adequacy. It's all about ensuring a bank has enough reserves
Yeah.
to withstand those financial shocks and continue operating even in tough times. And IDFC First Bank's capital position looks quite strong.
Okay, so walk us through the details. Why are we feeling confident about their capital adequacy?
Okay, so remember that successful equity raise
Yeah.
of 3,200 crore rupees from those institutional investors back in July of 24.
Yes.
That was a strategic move to really bolster their capital base.
Right. That infusion of capital definitely gave them a boost.
It did. And they've recently also completed that merger with IDFC Ltd, which has added another 618 crore rupees to their net worth.
Okay, so they've been actively taking steps to kind of fortify that capital position. What does this mean for their overall capital adequacy ratio?
Taking everything into account, their capital adequacy ratio, or CAR, now stands at a very healthy 16.60%.
Okay, now for those of us who don't speak fluent finance, can you break down what those numbers actually mean?
Sure, these ratios, they're well above the regulatory requirements, giving IDFC First Bank this very comfortable buffer to support their very ambitious growth plans.
Okay, so they're in a strong position to weather any potential storms
They are.
and continue expanding their operations.
Absolutely. And speaking of ambitions, let's not forget their Guidance 2.0, which really outlines their goals for the next 5 years. They're aiming for continued growth, right? In their loan book, their deposits, further enhancements in their asset quality, and even achieving a return on equity, or ROE, in the high teens. It is an ambitious roadmap.
Yeah.
But given their track record of strategic execution and financial discipline, I'd say it's well within their reach. They've shown they're not afraid to set big goals and then work methodically to achieve them.
Right. They've proven they can walk the walk. Now, there's another aspect of IDFC First Bank that deserves a little shout out:
What's that?
their commitment to environmental, social, and governance, or ESG principles.
Yeah, ESG is becoming increasingly important these days, not just for investors, but for customers as well. You know, people want to support companies that are not only profitable, but also responsible and sustainable.
It's about aligning your financial decisions with your values.
Exactly. And IDFC First Bank, they're walking the talk. They've implemented various initiatives from, say, financing electric vehicles and bicycles to supporting water and sanitation projects.
They even launched, what, green deposits?
They have, allowing customers to invest their money in those environmentally friendly projects. It really demonstrates their belief that businesses can be both profitable and purpose-driven, making a positive impact on the world while also delivering strong financial results.
It's not just about checking boxes.
It's not.
It's about integrating sustainability into their core business strategy.
Absolutely. And they've been recognized for their efforts too, you know,
Oh, yeah.
receiving awards and accolades for their strong ESG performance.
That's great. So it's clear that IDFC First Bank is really committed to building a sustainable and inclusive future. Now, As we kind of head into the final stretch of this deep dive, I want to take a step back
Okay.
and consider the bigger picture here. It's amazing to think that IDFC First Bank is still a relatively young entity.
It is. It's only been 5 years since that merger of IDFC Bank and Capital First.
I know, and they've already achieved this remarkable transformation.
They have.
They've built this really robust and diversified loan book. They've attracted a very loyal customer base. They've embraced digital innovation, and they've really established themselves as, well, a force to be reckoned with
Yeah.
in the Indian banking landscape. And they've done all of this while navigating, this constantly evolving economic and regulatory
It
environment.
really is impressive.
It is. So it makes you wonder, what's next for IDFC First Bank? They've laid out their ambitions in Guidance 2.0, but what will their legacy be?
Right. How will they shape the future of banking in India? It's exciting to think about.
It is. Stay tuned for part 3, where we kind of zoom out even further and contemplate the broader implications of IDFC First Bank's story. We'll explore the challenges and opportunities that lie ahead and ponder the legacy they're building. We'll be right back. Welcome back to the deep dive. We've really gone through a lot with IDFC First Bank.
We have
The numbers, their strategies, the challenges, the triumphs.
all the...
Now, in this final part, I think let's take a step back and think about the bigger picture. What does their journey so far actually tell us about the future of banking?
One thing that's really remarkable about IDFC First Bank is how they've managed to seamlessly blend the legacies of two, well, very different institutions.
Right.
Remember, we're talking about merging, on the one hand, IDFC Bank with its focus on large-scale infrastructure financing, and on the other hand, Capital First, which was, a powerhouse in retail and MSME lending.
Right. It's almost like, trying to mix oil and water. You wouldn't think they'd blend so well.
Exactly.
But, well, here they are, a testament to a well-executed merger.
A real success story. And I think that's what makes their story so compelling.
I agree.
They've retained the best of both worlds, haven't they?
They have.
Kept that sharp focus on prudent lending practices, which was, a hallmark of their infrastructure financing background. But at the same time, they've also embraced the agility and the customer centricity of a retail banking giant.
Right. It's like they took those best practices from each world.
Yeah.
And really forged a new path, and this unique combination has allowed them to not just survive,
Right.
but actually thrive, in this really rapidly changing financial landscape.
Yeah, I think that adaptability is going to be absolutely crucial as they move forward. I mean, the banking industry is in constant flux.
It
And
is.
these new technologies emerging all the time.
Yeah.
Customer expectations are shifting.
Right.
Competition is just intensifying every day.
Absolutely. And, let's not forget the regulatory landscape, which always seems to be evolving as well. So banks really do need to be nimble and responsive
They do.
to kind of stay ahead of the curve.
Yeah.
So what do you see as some of the key challenges or even opportunities that IDFC First Bank might encounter in the years ahead?
That's a good question. I think one of the biggest challenges for any bank, especially one that's really focused on growth, is managing asset quality. As their loan book expands, they'll need to maintain those stringent underwriting standards.
Yeah, right.
And just keep a really vigilant eye on, potential risks.
Especially given the current economic climate.
Oh, absolutely.
We've got rising interest rates, we've got persistent inflationary pressures, global uncertainties.
Right.
All of these factors can impact a borrower's ability to actually repay those loans.
Exactly.
So banks really do need to be prepared.
I think it's about striking that delicate balance,
Yeah.
between pursuing growth, but then also managing risk prudently. It's a real tightrope walk, and all banks have to kind of master it.
Yeah. I think another challenge will be managing those costs effectively. They've been investing heavily in technology, expanding that branch network, attracting top talent.
Yeah.
These are all essential for growth.
Yeah.
But they also add to expenses, right?
They do. They'll need to make sure they're achieving those economies of scale as they grow, and that their investments are really translating into tangible improvements in profitability.
I think this is where that digital strategy becomes even more critical.
Yeah.
By leveraging technology to automate processes, enhance that customer service, and even unlock those new revenue streams.
Yeah.
They can boost efficiency and improve their bottom line.
Absolutely. It's about being smart with your investments
Right.
and staying ahead of that digital curve. Now, let's flip the coin maybe,
Okay.
talk about some exciting opportunities.
I like it.
I think one of the most compelling aspects of IDFC First Bank's story is that they're still, relatively early in their growth journey.
They're a young bank. I mean, they've accomplished so much in just 5 years.
I know. It makes you wonder what they could achieve in the next 5, 10, 20 years.
Right.
I mean, the potential is enormous.
Yeah.
They're operating in a market with tremendous growth potential. India's economy is expanding.
Yes.
Its middle class is growing. The demand for financial services is just skyrocketing.
It really is. And IDFC First Bank is, well, they're perfectly positioned to capture that demand.
I think so too.
They've got a strong brand,
They do.
a diverse and growing product portfolio, and, well, a deep commitment to that customer centricity.
I think their digital capabilities also give them a significant edge.
Yeah.
In reaching a wider audience, especially in those rural areas where access to traditional banking services is still quite limited.
It is.
They have the potential to really bridge that gap and empower millions to participate in the formal financial system.
It's a great mission.
Yeah.
Bringing financial inclusion to those who need it most.
It is. And another, I think, significant opportunity lies in their ability to cross-sell products and services to
Yeah.
their existing customer base.
Yeah.
They've built this solid foundation of trust,
They have.
and they can leverage that to offer a much wider range of financial solutions,
Yeah.
meeting more of their customers' needs, all under one roof.
Right, becoming that one-stop shop for all things finance.
Exactly.
It's a powerful strategy both for customer loyalty and, well, for the bank's bottom line.
It is. So as they expand those wealth management offerings, grow that credit card portfolio, and really scale up their fee-based businesses,
Yeah.
they'll be well-positioned to generate more revenue and enhance their overall profitability.
It's a smart, sustainable approach
It is.
to long-term growth. So as we wrap up this deep dive into IDFC First Bank, I want to leave our listeners with a final thought to ponder. This bank has really charted an ambitious course for itself.
They have.
Set some pretty aggressive goals for the next 5 years.
Yeah.
And they've shown us that they're determined. They have the capabilities to reach those goals.
They have that unique blend of prudence and ambition. It's a combination that served them well.
It has, but the question remains, what will their legacy be? Will they be remembered as the bank that successfully merged two very different worlds? Created a new model for banking in India, one that embraces both, those large-scale projects and individual empowerment. Will they be known for their commitment to financial inclusion? Bringing millions into the fold of formal banking, empowering them to build better lives? Or will they be remembered as the bank that defied the odds, that navigated this challenging environment and really emerged as the true leader, a force for positive change in this financial industry? Only time will tell. But one thing is for sure, IDFC First Bank is a fascinating case study, a bank that's rewriting the rules and shaping the future of banking in India. They're a bank to watch, a bank with a story that's still unfolding. And on that note, we're going to wrap up this deep dive into IDFC First Bank. I've really enjoyed exploring their story, and I hope you have too. I think there's a lot we can learn from their journey about the power of adaptability, the importance of customer centricity, and, well, the potential of the Indian banking sector as a whole. Thanks for joining us on this deep dive, and until next time, keep exploring, keep learning, and keep diving deep.